Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody had a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. I do want to apologize. I'm a little late on this video because I did it after work instead of before. I woke up a little late. But for today, we are still above about $23,500. We're down $340 today, up $54 in market after hours. For the week, we're still at $573. For the month, we're up over $1,100. For the 3-month mark, we're still over $2,000. For the year, we're up over $1,000, and all time, we're up $3,300, up 16.5%, which is still great. We did get a dividend from Walgreens and from 3M. Walgreens paid us $281, and 3M paid us $294. So we made about $5 there, and then 3 days ago, Realty Income also paid us $351, and I bought a share. So a little update on the dividends there. Got paid a couple dollars from a couple stocks. Jumping right into the portfolio, starting with Realty Income. As you guys can see, we have 16 shares of this aristocrat now, about $970 of market value. Average cost is $46.31. We have 4% of the portfolio in Realty Income, up about $3 today, up $229 total, up 30%. We do have a dividend coming in on the 15th of December. As you guys can tell, I did go up a little bit. My average cost was 45 something before. Now it's 46.31. It generally trades around $60 a share, as you guys can see. The low is about $40. So at 60, it's still got $24 of upside, which is enough upside for me. I usually go for $15 to $20. So I know I'm increasing my average cost, but I am literally really close to the bottom there, around $45. So closer to the bottom than I am to the top. But 60 is still a good price, and I don't mind buying it a little bit above my average cost. Even if my average cost goes up to 60, it's one of my favorite companies, my favorite real estate stocks, so I do not mind going up in average cost to buy quality. Next, we have Altria. We have 151 shares, $6,400 of market value. Average cost is $43.59. We have 27% of the portfolio in Altria, down $10 today, down about $100 total, down 1.5%. Then we have Coca-Cola, Dividend King. We have 20 shares, $1,000 of market value. Average cost is $51.26. 4.5% of the portfolio is in Coca-Cola, down $1.40 today. Total up $40, up almost 4%. Have a dividend on the 15th coming in of $8.20. Then we have FRT. We have 1 share, $88.87 is our market value, $113.40 is our average cost, so a great cost on average opportunity there for FRT. About 0.4% of the portfolio is in FRT, down $1.28 today, down about $25, down 21%. But I'm not worried about it because this is one of those that I initiated a position, and I felt it was overvalued at $113. But I still had about $20 of upside, but right now I have a really good upside on the stock. So if I do transfer cash, it will be going into FRT if it's ex-dividend date, if it's prior to the ex date. But I do have a good cost on average opportunity there that I do want to take advantage of. Next, we have Lowe's. Kind of the opposite here from FRT. We have 2 shares, $320.18 our market value. Average cost is $100.86. 1.34% of the portfolio is in Lowe's, up $4.54 today, up $118.46, up about 59% there on Lowe's. Then AT&T still sitting a little bit above $30. 126 shares, $3,800 of market value. We have an average cost of about $30, so we're up a little bit here. 16% of the portfolio is in AT&T, down $50 today, up $117.23, up 3.13%. Then we have AbbVie, 60 shares, about $6,300 of market value. Average cost is $72.22. 26% of the portfolio is in AbbVie, down $86 today, up $1,900, up 45% on AbbVie. Then PBCT, my banking stock. We have 14 shares, $182.14. $10.90 is our average cost. About 0.7% of the portfolio is in PBCT. Down 14 cents today, up almost $30, up 19%. This one doesn't have a big spread on it, so it trades for from $9 to $17. So even at 13, I still have $4 of upside. I'd want to get it closer to my average cost, but this is one of those that has a really late X date. That's why I bought it, because I wanted to buy more AT&T, but when Altria paid, AT&T's X date already passed, so I couldn't add to that position, so I added to this instead, which I think will be a pretty common occurrence. depending on when Altria pays its dividend. So I'll probably be boosting up shares with this position, and I like them. They pay about the same. They pay the same dividend as Bank of America, and they're about half the price. So I do like it, and the dividend growth is there as well. So, and it's a dividend aristocrat, so it's a very good banking stock. Definitely kind of restores my faith in the banking industry versus Wells Fargo, because that really burned me. Next, we have J&J. We have 2 shares of this aristocrat, $300 of market value. Average cost is $135.79. 1.25% of the portfolio is in J&J. Down $7 today, up $27, up 10% on J&J. Then we have 3M, another dividend king. We have 2 shares, about $350 of market value. Average cost is $147.28. 1.45% of the portfolio is in 3M. Down $1.88 today, up $51.61, up 17.5% on our 2 3M shares. Then we have Walgreens. We have 6 shares, about $250 of market value. Average cost is about $40. 1% of the portfolio is in Walgreens, up 54 cents today, up 10.23, up 4.27% on Walgreens. Then we have ExxonMobil at $42.20. We have 86 shares, $3,600 of market value. Average cost is $52.74. 15% of the portfolio is in ExxonMobil, down $137 today, down $906, down about 20% here on ExxonMobil. Then we have Aflac, my insurance company. 1 share, $44.20 is our market value. Average cost is $35.75. 0.2% of the portfolio is in Aflac, down 64 cents today, up $8.45, up almost 24% on our 1 share of Aflac. So currently, guys, the screaming buys are FRT, PBCT, and ExxonMobil. So those would be the stocks I would be buying if I had any cash. Next, we're going to look at our watch list, starting with PepsiCo. So I love Pepsi. I love the diversified business. I love the Frito-Lay branch of the business. But at $144, I want it to be about $130 before I buy it. Kimberly-Clark at $136 is a steal, more than $20 of upside buying it there. Procter & Gamble at $135, not enough upside for me currently, but I love the business. Essex Property Trust at $240 is a steal at $300, so that's just more upside for me, and a great dividend aristocrat, so definitely want to be buying Essex Property Trust here. I'll buy it before 2021's up. Black Hills is my utility play at $60 of $20 of upside, definitely buying it there. Mickey D's at $212. About $15, a little bit more than $15 of upside. So it has the upside I want, and I really do want McDonald's. It's one of my favorite real estate stocks. Then we have Airbnb to round out the portfolio for the real estate. So we'll have Realty Income, FRT, Essex Property Trust, and McDonald's. So we get paid monthly, and then each individual month has a stock paying me for real estate as well. And then Airbnb is the growth portfolio's exposure to real estate. So I don't know quite yet about Airbnb. Currently, it's at like a 52-week low at about $126. That's down big. So as you guys can see, it shot up 112%, and then it's now it's still up 83%. So it's down about 13%. So it shot up way high, so I was expecting it to come down. So I think the estimation for the IPO price was like $70, so or about 80, something like that, 86 or $78 to $86, something like that, from JP Morgan, or it might have been Morgan Stanley. One of the big banks estimated it around $70. So I'm not sure quite where I think the price is going to end up. That's why I waited instead of doing it on IPO day. I mean, if you did it on IPO day, you'd have a really good cost on average opportunity of like $40 here. So not bad. I just don't know what to price it at because it's a growth stock and it's really new. There's no history for this to see kind of where it trades at. So I do want to own Airbnb. Like I said, it'll finish out the real estate portion of the portfolio, give me a little exposure in the growth sector, but this will be the last growth stock that I buy. Then we have Disney at like $170, which is crazy. It's insane. I bought it at like $125, so I should have stayed in Disney. My fault for getting out of the mouse house, but I'll get it someday. It's my favorite entertainment stock by far. I love Disney, love the parks, love the intellectual property, love the streaming service, which is the small segment of business that they have, and I think it's going to be the biggest catalyst for growth in the next 10 years, so next 5 to 10 years anyway. Huge Disney fan. But the stock and growth that I'm buying first is Berkshire Hathaway. I watched a video by the Swedish investor who's phenomenal. If you haven't watched his videos, go watch them. He did the history of Buffett becoming a millionaire. The trades the dude made were just insane. Like the insurance trading that he learned from Benjamin Graham from Geico before it was Geico, like before it was big, was insane. Like his like there's like 2 or 3 big transactions that were like 120% return. So the dude just knew how to do it. Like the guy knew about compound interest when he was 11. So Berkshire Hathaway's in good hands, and he's teaching his predecessors how to do it as well. So when it comes to stocks that I want, Realty Income is my favorite. Berkshire Hathaway is my number 2. Like for the entire market. Like I love Berkshire Hathaway. I've been a big fan for a while, but the reason that I waited on it was because I didn't like how much of an exposure it had to the banking sector, and he's really trimmed down that banking position. Like overall, he just trimmed a bunch of positions. So, and he got heavy into pharmaceuticals, which I already have AbbVie. But he got into Merck, Pfizer, like a lot of the ones that I was actually looking into, but I liked AbbVie more because it had more upside. So I like that he got out of banks. He still has, he has some Wells Fargo, he has some JP Morgan. He got completely out of Goldman Sachs, but he bumped up his Bank of America. He has a lot of Coca-Cola, a lot of Kraft Heinz, and a lot of Apple. So I like his like top 4, top 5 holdings. So a lot more now than I did before. So now that he has less exposure to the banks, I want Berkshire Hathaway. In fact, I might buy it before Christmas. That might be my Christmas present to myself, is buying a share of Berkshire. So this will be one that I hold forever. I love Berkshire Hathaway. I honestly want to buy it for See's Candy because that business just rakes in money. It's ridiculous. So yeah, I'm a huge fan of Buffett, and I will be adding pretty aggressively. I know it doesn't pay a dividend, but I don't even care. Like I love Berkshire so much, and love Buffett. So that's the reason I got into Aflac, was because I wanted insurance because of Buffett. So it was between that or Travelers, and I might actually add Travelers too because I like them both. But yeah, anyways, guys, I will be adding Berkshire probably before the end of the year because I love it so much. But with that being said, guys, in the portfolio, like I said, the buys, but on the watch list, Kimberly-Clark, Essex Property Trust, Black Hills, and definitely Berkshire. I'd have to buy it. I'll buy it before the end of the year. Anyways, guys, with that being said, thank you so much for watching. Remember to subscribe to my channel, That Dividend Guy. I post Monday through Friday Robinhood portfolio updates. I have a video coming out every single day this week. I did a video on Airbnb's IPO, DoorDash. I did Warren Buffett's Q3 moves, Tesla, stock prediction. I do a lot of stuff. So if you guys are a fan of stock market news and portfolio updates, watching somebody build wealth, make sure you hit the subscribe button. Thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.